Oil just triggered this fatal signal in Dow. Is oil trade finally over? Dow Jones Industrial Average just made a new lower low this year. It has blew past the June low. Essentially, Dow has just triggered a kiss of death signal just like in 2008. This is exactly as I predicted in my previous video. And it has fallen below its 200 weekly moving average for the first time. It's all because of oil stocks. We will talk about it next. We had a gap down on Friday opening. That gap is probably going to get filled. The reason is we have data showing the investment sentiment is at its highest bearish reading this year. So we should expect another bear market rally. We also recorded the highest high in dollar index since 2002. This is a very historic year in the market. Buckle up because this roller coaster ride is going to get insane. I am going to let you know exactly what's going to happen as always. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back everyone to my Audacious Money Witch channel where we talk about macroeconomy, stocks, bonds, commodity markets. If you like any of these markets, consider subscribing. It's free. And of course, tap the like button if you like what you see in today's video. It's totally free to do so. This video is brought to you by my Patreon. If you are a sweet boy, go to patreon.com/magicalgoddesscheryl to support all my work. If you want to be my good boy, apply to write your first book with me. Author of best-selling books, Goddess Cheryl. My good boys always obey, and they do everything I ask of them. They never say no. You will get the encouragement you need to be on your author journey. Oil price just dropped 5% to $79 a barrel on Friday. It actually reached a bottom of $78 at the low. Oil stocks are the ones that crashes the most on Friday. Check out the chart of XOP. It has fell more than 8% on Friday. That's how these oil stocks dragging the Dow down to a record low this year. Back in June, oil stocks are at their high. Check out this chart of Dow on the monthly. We reached a new high in January. We first crossed the stay below 21 EMA in June. And then we had a bear market rally in July and early August above the 21 EMA. That's the kiss. In this September, we crashed below the 21 EMA. Yet again, moreover, we made a new lower low than the June low, confirming the death. On the weekly chart, it has dropped below the 200-week moving average too. This means the probability of a long bear market crash just went up to an all-time high. But not before a bear market bounce again, because check this out. The AAII investor sentiment just got a record bearish reading of the year. It recorded 60.9% of the investors are bearish. Despite oil dropped 5% in a day, long bond TLT went up on Friday, but only 0.4%. If oil can continue to crash, that brings down the inflation expectation, which could bring down interest rate. But that's not for a while because of the Fed's plan to raise the rate to 4.5% into next year. So does that mean oil price will stay below $79 a barrel, or could it go back higher? Because what happens after they stop releasing SPR into the open oil market in October? Oil falls below $80 a barrel. Weakening growth, strengthening dollar weigh on crude prices that are near the level they started the year. U.S. oil prices fell below $80 a barrel for the first time since January, dragged down by mounting fears of a global recession and a rapidly strengthening U.S. dollar. West Texas intermediate crude futures dropped 5.7% to close at $78.74. The main U.S. oil price is down about 36% from its June peak and nearly to where it began the year. Brent crude, the global benchmark, shed 4.8% Friday to end at $86.15. Behind the slide, a string of major central banks, including the Federal Reserve, the Bank of England, the Swiss National Bank, and Norges Bank, raised interest rates this week, tightening financial conditions on a new global basis have ratcheted up fears about the widespread economic slowdown, which would also mean lower energy demand. Business surveys Friday indicated that economic activity in Europe declined sharply in September. Rising U.S. rates and falling stocks have also sparked a surge in the dollar, sending the WSJ dollar index up more than 1% Friday. Many commodities, including oil, are priced in dollars so that strengthening currency makes them more expensive for overseas buyers. The market is worried about growth, and this is sending commodity prices down. It's a very bad cocktail of this and a stronger dollar. The S&P 500's energy sector, one of the stock market's bright spots this year, tumbled 6.7%. Higher flyers, Halliburton Corporation and Marathon Oil Corp fell 8.7% and 11% respectively. European blue chips oil stocks BP plc and Shell plc both dropped more than 5%. Traders said recent data showing weakness U.S. fuel demand helped push prices lower. A looming recession in Europe is expected to damp energy consumption further, though high natural gas prices are encouraging some industrial companies to burn diesel instead. What? Diesel instead? The Energy Information Administration this week said that the total products supplied, a gauge of demand, averaged 19.6 million barrels a day over the past 4 weeks, down 6.7% from the same period of last year. Gasoline demand was down almost 8%, and consumption of distillates, which include diesel, fell by 16%. Meanwhile, the Department of Energy said this week that it plans to sell up to 10 million barrels of oil from the Strategic Petroleum Reserve in November, extending a stretch of releases launched after Russia's invasion of Ukraine. That will add to supply and tamp down prices, traders said. You've got the Fed raising rates. You've got the DOW swamping the market with crude oil. In one sign of falling demand for fuel, profit margins from refining gasoline, known as crack spreads, have dropped in the US, Europe, and Asia in the recent weeks. The cracks are getting destroyed. U.S. crude prices have fallen to a discount of almost $7 a barrel compared with Brent, likely encouraging energy traders to send crude across the Atlantic. In part, Mr. Newman said, that reflects expectations that Europe will need to import more U.S. oil to replace Russian crude when the European Union bans Russian crude shipments from December 5th as part of sanctions on Moscow for the invasion. Even with growing expectations of the global recession next year, some traders say there are reasons to believe oil prices could stage a recovery. The EU ban is likely to lead Russian oil production to fall, leaving a hole in global supplies. Spare production capacity in most members of the OPEC cartel is limited. Analysts at JP Morgan Chase said this week they expect Brent prices to recover to $100 a barrel in the final quarter of the year. Now we have stock market confirming a real bear market is forming. People's wealth effect is disappearing as demand destruction happening as we speak. This could lower the consumer price index, as you can see from this chart. As we are crashing into a recession, CPI falls with it. Canadian CPI actually fell from July at 7.6% to August at 7%. It was forecast at 7.3%. We can see raising the rate works to fight inflation. It just takes time. Let's look at France. Their manufacturing sector is contracting, printed a red 47.8. 50 is neutral. Above 50 is expansion. Below 50 is contraction. Germany is worse. Both of their manufacturing and services sectors are contracting. Printed a 48.3 and a 45.4. That is to be expected, as we already reported their energy prices is at 10 times in the US. A lot of factories are shut down. Britain's manufacturing PMI contracted slower than last month, printed a 48.5 higher than 47.3 from last month. But their service PMI started contracting this month, printed a 49.2. In the whole Eurozone, we can see the manufacturing are contracting from their PMI reading printed 48.5, and the service sectors are contracting from their service PMI at 48.9. For the US, the manufacturing sector, the economy is still in expansion. But in the service sector, it started contracting in August, printed a 43.7. And in September, it contracted slightly as it printed 49.2. But looking at all these numbers, you can clearly see that we are in a global recession already. And as the algorithm keeps on selling stocks during a time where no corporations are buying back their own shares, keeping a floor on the market falling. Also, we are facing more and more challenging global crisis as the nuclear warning from Russia and Taiwan tension between the US and China. The biggest economies in the world. The worst is yet to come. Okay, now I'm going to show you Ignite the Passion, Co-Create Your Dreams by David Vine and Jama, two of my clients. It's such an incredible book. And Wicked Pussy Perfume by Taddy, Eazzy. And this one is an erotic novel, another incredible book. And Taddy, Eazzy is another one of my clients. And my book, You Hold the Magical Key to Your Success by Cheryl Zhang. It's such an incredible book, this one. Order your copy today. And Time, Awareness, and Secret Millionaire by Cheryl Zhang. And Jingle Bell Magic, Ask and It Is Given. This one is a best-selling book, another one of my books. And all of these books help with depression, anxiety, and stress. So if you're having any of these symptoms, order your copy today. Thank you for liking and commenting on my videos. I hope you've enjoyed my video today. I thank you for watching. Bye.